What's up guys, and welcome back to Wall Street Millennial. Today we're looking at Tai Lopez's latest venture. If you're unfamiliar, Tai Lopez is an entrepreneurship guru who is widely considered to be a scammer. He sells a wide range of online courses and investment opportunities which have been mostly disasters. For example, his flagship Mentor Box service has 83% bad reviews on Trustpilot, with reviewers claiming that the access codes did not even work and they continue to be charged even after canceling the service. Over the years, he has built a wide array of courses ranging from real estate investing to his lifestyle training program. The content of these courses are for the most part generic advice on inspirational sayings, which you could probably easily find on YouTube for free. Yet he charges $600 to $700 for each course. Despite his courses being of questionable quality, he is able to make millions of dollars selling them by using aspirational advertising, such as this Lamborghini commercial that has gone viral with over 70 million views.
Here in my garage, just bought this new Lamborghini here.
Tai tries to portray a lavish lifestyle that normal people should aspire to. Unfortunately, most of his personal wealth is fake. He does not own the Southern California mansion that he uses in many of his commercials. It is actually rented, as are most of his cars. Another way Tai tries to push his products is through his affiliate program, where he pays other influencers a 50% commission for every time they sell one of his courses. The purpose of this affiliate program is that if you see his courses advertised by other companies like Udemy, you might be more inclined to think it's legit. But this means nothing, as they are just pushing it for their 50% affiliate cut. Speaking of affiliate marketing, if you haven't already, make sure to get 4 free stocks on Webull by clicking the link in the description below. It's literally free money, so why wouldn't you do it? Tai Lopez's most recent business venture is called Retail E-commerce Ventures, and has acquired several well-known American brands in distress during the coronavirus. These include Pier 1 Imports, Radio Shack, Steinmart, and others. These are all brick-and-mortar retailers who were on their way down even before the pandemic, and then COVID just put the last nail in the coffin. For example, Radio Shack was one of their targets in acquisitions, but had actually gone bankrupt in 2015, years before coronavirus even hit. In 2013, they submitted their last annual report with the SEC, in which they reported that their net annual loss was $400 million, down from a net profit of $70 million in 2011. It was also clear that their balance sheet was showing signs of strain, as their long-term debt increased from less than $500 million to $613 million. Things were so bad for Radio Shack that they even came out telling investors not to invest in Radio Shack stock because they are filing for bankruptcy and their stock is not worth anything. Some of the other left-for-dead brands Tai Lopez is buying are Modell's Sporting Goods, The Book People, and Linens and Things. To get the capital to run this operation, Tai Lopez is marketing to individual investors to contribute to this venture. In line with his past gimmicks, he is utilizing dramatized commercials and grand references to convince potential investors of the size of the opportunity and the prospects of the project.
Every so often an opportunity arises that is so big you have to double check just to make sure it's real. And what we predict to be 54 new investment opportunities have opened up right in front of our eyes. As the saying goes, there are decades where nothing happens and there are weeks where decades happen. Those weeks of change just happen. If you're an accredited investor, it's time to take action. My name is Tai Lopez and my business partner, Dr. Alex Mayer, and I.
This commercial is running on YouTube advertisements right now, desperately trying to get people to give him money to fund this project. It is so insane, it's comical. Legitimate investment shops do not market themselves in the way that Tai Lopez is doing here. In fact, any serious private equity style operation would not market to consumers at all. Carlyle Group, one of the biggest private equity shops in the country, doesn't sell themselves on their website. In fact, they are not even publicly accepting investors, as they get their capital through their existing relationships with people in the space or through financing. Compare this to Tai Lopez's REV website, which is actually just one huge homepage entirely devoted to convincing you why investing in this operation will make you the next Jeff Bezos. Yet somehow, he was able to get an interview on CNBC in which he talks about how he wants to transition the brick-and-mortar stores to variable rents instead of fixed rents, and reduce fixed costs by taking business online. He also talks about how he's supposedly been doing e-commerce since 2001, and since 2014 he's been on the lookout for distressed retailers. He actually makes a good case for himself in this interview, and composes himself much more professionally than in his personal YouTube ads with Lamborghinis and Porsches that we've all seen too many of. To his credit, he is a marketing genius. He knows how to get people talking about him and portray himself in the most optimal way possible in any situation, which is why we are doing a video on him right now. Everyone knows him, and that's an impressive thing for him to have accomplished. But should you invest in this new venture? Let's take a look at the executive team to see if we can have confidence in their ability to turn these brands around. Tai Lopez has zero experience in investing in retail and is eminently unqualified to run retail e-commerce ventures. To gain credibility with prospectives, he hired Alex Mayer to be CEO, while Tai takes the position of executive chairman. Interestingly, Alex Mayer also has zero experience in investing or e-commerce, with his main accomplishments being a PhD, experience as a NASA scientist, and co-founding the dating website Zoosk. His PhD is in mechanical engineering, and while this is a respectable credential, his academic research focused around operations management, having absolutely nothing to do with e-commerce. He also claims in his bio to be a former NASA scientist, but looking at his LinkedIn, he never actually worked for NASA. He instead worked for the QSS Group, a small engineering company that was a contractor for NASA. So while he did work on NASA in a sense, he was never an employee there, so it is misleading for him to claim that he is a NASA scientist. Seemingly, his most significant accomplishment is co-founding dating website Zoosk and selling it for $298 million. He co-founded Zoosk in 2007 and stayed there as co-CEO until 2014, but his claim that he sold it for $298 million is quite misleading. Zoosk was sold in 2019, a full 5 years after Mayer left the company. So he can't take credit for the sale as he had no involvement at the company at the time, yet on his bio he claims that he was the one who sold it for $298 million. If you haven't already, click the link in the description below to get 4 free stocks when you deposit $100 into Webull. The value of the stocks range from at least $21 to up to $3,700, and Webull is a free trading app, so it's literally free money. Why wouldn't you do it? On top of that, many people prefer it to Robinhood because it has a better interface, offers 3 months of free level 2 market data, and gives everyone full extended trading hours that last until 8 p.m. If you use our link in the description below, you are also supporting this channel. Zoosk ended up being a disastrous investment for Spark Networks, with their stock falling more than 70% since the deal was closed, taking its market cap down to $138 million, less than half of the price they paid for Zoosk. Zoosk is having trouble maintaining user growth mainly because of its annoying pricing structure. You can't send messages to your matches unless you pay for a premium subscription. This makes it very difficult for them to compete with free dating apps like Tinder. Why would you pay $30 a month to message on Zoosk when you can use Tinder for free and there are way more people on Tinder anyway? So Alex Mayer has an interesting career history that he blatantly over-exaggerates in his bio, but he literally has zero experience in private equity or e-commerce. So why did Tai Lopez choose him to be CEO of Retail E-Commerce Ventures? It's because Mayer is already part of Tai's team. He helped Tai found MentorBox, the scam mentoring platform that has a 1.5-star rating on Trustpilot. Basically, Tai Lopez just installed one of his friends as CEO of Retail E-Commerce Ventures, and they exaggerated his other accomplishments to make people think he's more legit. The rest of his team is equally unimpressive. They hired this guy, Anton DiMartino, as a senior investment associate, but he has no investment experience, so they just have a cliche Winston Churchill quote in his bio. Basically, the whole executive team at Retail E-Commerce Ventures is a complete joke, and they have no experience and no idea what they're doing. I think you could have guessed my conclusion already, but in my opinion, Retail E-Commerce Ventures is just Tai Lopez's latest scam, and you're probably better off just putting your money in Dogecoin. Alright guys, that wraps it up for this video. If you have any thoughts on Retail E-Commerce Ventures, or anything else on Tai Lopez, let us know in the comments section below. If you like this content, make sure to like, subscribe, and share. As always, we thank you for your support. Wall Street Millennial, signing out.